What's good, everybody? Welcome back to the channel, and to nobody's surprise, we're getting ready to have a quick talk about money. Today, in this video, is all about the stock market. I have not made a stock market video in a while, but I was compelled to do one because this is a really weird stock market that we're in right now. I've been trading for, this is my fourth, fifth year, and I've seen the pandemic market, seen the market prior to the pandemic, which was really stable and really kind of fooled me into thinking that things were easy and predictable to trade. The pandemic market really, changed my perspective on that. And the market that we're in now is really wild and wacky, just like our economy. But I want to give you not one, two, three, but four strategies that you can employ, and hopefully one of them works for you so you can start profiting in the stock market. So let's jump right into it. The first strategy that I'm going to talk about is long-term trading. Okay, long-term trading is something that's viable right now because a lot of companies have been just completely beaten down to the ground. And the banking sector has really suffered a lot through the bank collapses and things of that nature. Right now, I'm profiling Fifth Third Bank. All right. If you aren't familiar with Fifth Third Bank, they're a pretty big bank. They're in a couple dozen states at least around the country. And right now, they're severely oversold and beat down. The price target on Fifth Third Bank is about $36 per share. It's currently at $26 a share. And it's been as low as about $22 a share. Now, the graph that I have up here is showing the Fifth Third Bank trading history on the 4-hour chart. It goes back approximately close to 3 months, and you'll see it's been as high as 38 bucks. It's been as low as $22. Fifth Third Bank, in my opinion, is a good, safe, long-term hold. And when I say the price target is about $36, that's what they're thinking it'll get to somewhere inside of 12 months or so. Could be a few months short of 12 months, could be a few months more than 12 months. But at some point, I feel pretty confident that if you bought at this price, you're going to come out with profit. The profit amount, that kind of depends on you. Do you want 5%? Do you want 10%? Do you want 20%? There's lots of different strategies, but long-term holds is one for a person that wants to basically passively invest, buy, and then just wait on it to get where it has to get. But you're going to have to be patient. Okay. Now, I also want to mention, with all of these strategies, buying at the bottom is paramount. So we only buy stuff that is severely oversold. In the case of that Fifth Third Bank, it is very oversold. It's considered undervalued right now. So we only buy stuff that's extremely oversold, which means once it reaches a certain point, as far as being oversold, it sends us an alert to institutional buyers, and they start buying, and then the regular retail buyers like you and me start buying to catch on to that wave and get some of that profit. The second strategy that I'm going to highlight here is range trading. No, we're going to do range trading later. The second strategy that we're going to look at is not range trading. We're going to do swing trading first. Swing trading. What is swing trading, you may ask? Swing trading is simply when you take a position and you do not get exit from that position the same day. So swing trading means you can hold it for a day, you can hold it for 2 weeks, you can hold it for a month, you can hold it for 3 days. You're just holding it until it reaches your profit target. And a great swing trade stock is Google. I have the Google chart up here, and Google, this is the daily, and this is about 6 months or so worth of data on the daily chart. Google has been in an upward tick. It basically, it bottomed out at about $83 right around November 1st. It got up to around 100 bucks. It sold back off to about $85, $86, and it ran back to a little over 100, sold off again to around 90 bucks, and most recently it ran up to a little over 109. It is currently at $108.87. You kind of see what I mean when I say swing trading. You're buying it when it hits kind of the bottom of its price range, and then you sell it when it starts getting close to the top, or whatever your comfortable area of profit is. Another thing I want you to take note of, because I'm not trying to teach you how to trade stocks in one video, but I want to give you valuable information. So another thing to take note of is, if you notice and you look at my chart again, which I have up, you can see that each time it sells to the bottom, it's getting a little bit higher. So the lows are increasing. So that means that this thing, which in my opinion is probably fair market value around $120, $125, not sure when it will get there, but every time it sells down, you can jump in, you can get some profit, and then you can get back out. The next type of trading is going to be range trading. Range trading, extremely popular in a kooky market like this. Now, range trading is when you have identified that a stock hasn't been going below a certain level or above a certain level for a period of time. It's created a range, and you want to try to buy near the bottom of that range and sell it when it gets somewhere near the top of the range. And it's like the profit may not be a huge range, but it's almost, I don't want to say guaranteed because we're talking about the stock market, it's highly likely that you're going to get profit. Let's look at a very popular range trade stock chart right now. This is Roku. Roku has been range trading for approximately 2 months or so. It's been bottoming out somewhere a little under $60, and it's been topping out somewhere around $66, $67. So it's anywhere from 1 to about maybe 10 or 11% opportunity for profit that's within that range. And I've drawn lines here on the chart so you can see where the range kind of bottoms out and where it kind of tops out. Now, in the last week and a half, that range has been getting tighter. So that's an indication that this stock is maybe soon going to start heading one way or the other, up or down. All we can do is speculate. But if I was going to buy Roku right now, I'd be trying to get it towards the bottom of that range, as close to the $60 mark as possible. And it might not get all the way to 60. It might end up being 61, 61 and a half. But those types of prices should allow you some room to get out with profit. Your range, your profit target might be 1%, it might be 2%, it might be 5%, but there is some opportunity for profit within that range. You just got to keep a close eye on it and make sure that that range does not doesn't change on you. Number 4, this is the last type, and to me, this is like easy money. All right, this is dividend investing. All right, and it's not the dividend investing that you may be thinking about. A lot of companies pay dividends every 3 months, but there are select companies, that's referred to as a quarterly dividend, by the way, but there are select companies that pay dividends every single month. I'm going to highlight a real estate company that pays a dividend every single month. This company, SLG, SL Green Realty, currently it's at about $22.93 a share. It is sold way down from a high of about $48 earlier this year to where it is currently. It actually got as low as $18.83. This company pays a monthly dividend of 27 cents, a little over 1% of the price of the actual stock where it is right now. So there's 2 ways you can profit with this. First is, let's say you buy 100 shares. You will get this dividend every month, which is about 27 bucks a month, okay? Not a whole lot of money, but it is profit. And you're going to get that every single month. So at the end of a year, you'd be at a 12% profit. But since you're buying this stock at such a low rate, because it has a price target of about $35 per share, Say if you bought it for a year and at the end of that year, the price was $30. You bought it at about $23. You bought 100 shares. So you're looking at $30. So that's $7 per share times 100. That's $700. And then you'd have the dividend each month of 27 cents times 100, which is $27. Multiply that by 12. That's what, 270, 297. That would be $324 plus the 700. So it would cost about $2,300 to buy 100 shares, and you could potentially be looking at a profit of over $1,000 off of a $2,300 investment in the span of 1 year. So there's other companies like that do monthly dividends. I just wanted to highlight one because I thought that was a pretty good dividend per month, especially if you got the type of capital to buy some major shares. You can make quite a bit off of dividends, and also you could take those dividends and actually purchase more shares. So you could make your payout even bigger, or you could just take the profit off the dividends, and at the end of the year, let's say if the price has moved up $5, well, that's another $500 that you would have, plus the dividend income that you've been getting per month over the last 12 months. All right, guys, that's all I got for this one. This is 4 strategies that you can use to start profiting in this wacky stock market that we're in right now. This will even work in this wacky stock market that we're in right now. Make sure you take the time to subscribe, like, share, pop that notification bell so you'll know when more videos like this are coming out. Our good friends at YouTube think that this video that's on the screen is the next one you should watch. So make sure you check that next video out. Until I come back with my next video, guys, we're going to be talking about money. We're going to keep getting money. But for right now, I'm 100% gone.